Welcome to the Techno Fundamental Report for February the 16th. Predictions are useless. They really are. I mean, you can spend a lot of time worrying about the future, and it really is best just to take things a day at a time. Don't get into predicting, just look at what the current trends are. And where this comes in as being important is that when the trends do turn positive, and according to Walter Deemer, he says, when the time comes to buy, you won't want to, which basically is because we've been in a multi-year bear market for growth stocks since February of 21. When the time comes, it's going to be very difficult to change your thinking. You know, this is important. It says one emotionally driven investment that causes massive losses is enough to keep you away from all investments for life. You know, if you really don't pay attention and get into a bad deal and don't deal with the reality of it, it can really set you back. But, you know, what this says here, it says before you invest in something, invest in time to understand it. That's so important. That's the purpose of Techno Fundamental. Now, you know, Warren Buffett, one time there was a study done that was, why was Warren Buffett so successful? And it's mainly because he's been doing it for 90 years. You know, my portfolio, I've been building my portfolio for at least 40 years. So this is a long-term process. This is a long-term process. Rome wasn't built in a day. So let's take a look at things. New highs, not really seeing a whole lot with new highs. Would like to see new highs on the S&P get back above 60 a day. Not happening yet. So the buyers really haven't stepped up like we would like. However, the S&P is in an uptrend. It's above the 200-day moving average. The NASDAQ is in an uptrend, and it's above the 200-day moving average. And then our other 5 indexes that we look at, well, we look at a total of 5, are all in positive uptrends. Volatility has been coming down. We're seeing improvement in the VIX, where we're in a downtrend for volatility, which is a positive. The aggression index is actually looking quite well here. We broke above the lower moving average. It is now turned up. We're above the upper moving average and actually trying to form an uptrend here. We'll just have to see. But the aggression index is an important indicator. You know, you can see that back here in 21, it gave a sell signal and pretty much would have kept you out of the market for the last 2 years. This is interest rates. So this is our key economic indicators, interest rates being 1. Again, interest rates continue in an uptrend because they are above the 200-day moving average and actually starting to go into a short-term uptrend here. So interest rates have been moving higher. We're also seeing some hot inflation reports, which could cause rates to continue to climb. However, the price of oil continues in a downtrend. Financial stocks are in an uptrend, so they look positive. Number of new lows on the New York Stock Exchange, well under control. You know, we look for an extended period of time below 40, which yesterday we only had 12. So the number of new lows have dried up, which basically tells you that, you know, the sellers are getting exhausted, but the buyers really haven't come in yet. Now, I did want to point out on the survey that was done last week for the AAII bull-bear ratio, as you can see, we had an extended period below 0. Well, last week we popped up to a plus 12.5. So there is a little bit of optimism coming into the market here. So just be aware of that. We've had somewhat of a rally that has caused sentiment to change a little bit. Not a whole lot, but some. Here is the trend indicator that we're using, which is moving averages going from the 25-day all the way out to the 250-day. You can see here that, you know, we got all tangled up in here, went into a downtrend. Now we're starting to see a breakout above these moving averages, and things are starting to kind of be a mirror image of this image. Not really in an uptrend like we would like, but it seems to be getting there. Now, I did want to mention this company as our fundamental story. This is a company called Axcelis. They are in the semiconductor fabrication business, meaning that they sell equipment to the semiconductor manufacturers. You can see here, this is a really, really nice uptrend here. You got your buy signal back here with this volume spike breaking out of a base. I mean, if you look at the weekly graph, you can see pretty much that, it is in a weekly uptrend, very powerful uptrend. The story here is basically that the semiconductor industry is going through somewhat of a revolution where they're switching from silicon as their primary product to silicon carbide. So you have to wonder, is there going to be retooling involved? So you want to look at the fabrication people in the semiconductor industry. Now here are the numbers on the company. Return on equity of very strong, 30%, very, very nice. Quarterly earnings growth, we're up 59% over last year. This is as of the fourth quarter. Profit margin, roughly 20%. They do have some debt, not a lot. Their current ratio is very solid. The debt is about $46 million, but they've got $432 million in cash. So this is a very solid company financially. It's a small company, but with small companies, that's really where you want to look at the numbers, is on the small ones. So if you have any questions, let me know. Thank you very much.